Yo, it's Hugo back with another video. So, we're going to be going over just market structure today. I felt the need to do this video because I feel like a lot of people just need to learn the basics of market structure. So, we're going to do the basics of market structure, show you exactly what it looks like on the charts, and then show you, resources and tools that I have in my Discord that can help you, become more profitable and really gain that key eye and train your eye to see these things in the market when you see them. Um, so what we're going to start off with is just first what a buy structure would look like, and then what a sell structure would look like. Bullish, bearish. All right. So if we look at these two structures here, we see that price would be going up. And this is simulated, yes, but let's try to make it real for y'all. All right. So if we have a low here. So this is what we would call a lower low. And then after that lower low, it would be a higher high here. And that's what these stand for. So if you were wondering that, we got the higher high here, a lower low, higher high. Then we would have a higher low down here. Then it just kind of repeats itself. So then we would have another higher high here. We would have a higher low. And then another higher high. So that's basically how structure is ran. You go from lower low to higher low to higher low to higher high. So that's when you know market structure is going in a bullish run, a bullish trend, upward trend, a buy trend, whatever term you use or refer to relate to that. Um, and now we would go over to the bullish trend. So we could actually type that here. Bullish on this side, and then we got bearish on this side. All right. So now we're going to do the same thing we did on the other side, on this side. So let's start from the low again. Actually, we'll start from here. So this will be a higher high. And then as we went down, we created a lower low. Sorry about that. Second. We created a lower low. That's where the lower low went. So here will be the higher high. Boom. Higher high, lower low. And then we would then create a lower high right here. So that lower high would indicate to us that we may be seeing another drop. Why? Because price didn't close above this high once again. And that's the definitely the thing that I want you guys to focus on. I think when a lot of people see candles, they get kind of all over the place about what they're doing, what they're seeing, and getting confused on the charts. What I advise you to do is switch your charts to a line chart because it would help you see the higher highs and the lower lows. And especially as a beginner, just mark these areas up. Just go from the lowest time frame to the highest time frame. So I would advise you to go to 1 minute, 5 minute, 15 minute, 1 hour, 4 hour and do this right here. Go to every time frame and recognize these lower lows, higher highs, higher lows, higher highs, higher lows, and higher highs. And then for the opposite side, the higher highs, lower lows, lower highs, lower lows, higher lows, and lower lows. So it can be very confusing, but this is the reason why I'm illustrating it for you guys so you guys can get a better understanding of what we're looking for when we're looking to get into the market. So we got a higher high here, a lower low, a lower high, and then this would be another lower high that it created because it's still lower than this last structure, but it came up high. So lower high here, and then this would be considered a lower low. I don't know why I keep putting the lower low down there. Lower low, lower high. All right. So these will both be lower highs. Got the higher high up here because we just came from an uptrend. So basically, if these were connected, let's just say these were connected, market trend was going up, and then we saw the market shift. So once you see the market break structure, which that would be considered a break of structure right there. So I know you guys see me do this a lot on my charts. So you guys will see that that was a break of structure there. And now, once that break of structure happened, we'll be looking for price to create a lower high for it to respect this area for us to get in for a sell. So what it would look like for us to get into that trade, it would look exactly like this. No candles needed. And we would be targeting for price to create that lower low. So even with price, we would be in this trade. And even remember, the market never leaves you. So don't have FOMO. Let's just say you missed this trade. Just do it again. The market structure is going to always, repeat itself. Whether you have to use a sell stop or buy stop in order to get in, that's what I would advise. But let's just say you missed this move down. You kind of was thinking that it wasn't going to respect this structure, and you definitely, saw it move down, and you're like, dang, I missed it. Don't have FOMO. Just wait for the next lower high and we could just get in here. Boom. Stop loss right at where you missed that move, or you could put it above that last structure that it created before it made this dip down just to be safe. And now we will be targeting another lower low. It's just as easy as that. Just make it simple for yourself. And this, it just flips. So it's the same thing, both ways, for getting in buys and getting in sells. So let's just say we were trying to get in a buy. We saw that the price was low. It got up high, but it wasn't enough for us to get into a buy for, once we saw this impulse up. We saw that price came down, but it respected this last structure here. We're like, okay, we think it might buy. So we get into a buy. Boom. We'll put that stop loss right close below that last structure that we last got that low at. And we will be shooting for upward move. So we'll be shooting for a higher high. So it's just as easy as that. You don't need candles to practice this, but I advise that you use your own chart and you use the line chart to mark these areas up on every time frame so you can recognize it. So right now, I'm going to shift over into the resources we have into the chat so you guys can see that. And then we'll come back to the charts to show you guys a real example of it on a live chart and with the candlesticks and everything. So let's go to the Discord chat real quick. And this is basically what I'll be showing you guys. So this is in my Discord. It's not for anybody who's just has an active regular membership. You'd have to get the blue package in order to see this. But this actually shows you exactly what I'm doing on my charts every time I'm charting and looking to get into a possible trade. So remember, every time frame moves exactly the same. So if you get a breaker structure on the 4 hour, you would be looking for price to now, at this low, create a higher low, lower high, higher low, higher high, higher low, higher high, and then break structure now again on the 1 hour. So if you already see that price it on the 4 hour is in a bullish trend, now you wait for it. You mark up the last candle that you have up here, or this last push up that it created is the whole point of interest. So within this whole area of this last push up before it broke structure, it can sell anywhere in this area. It could have sold right here. It could have just went just sold right there. So this whole area is an area you should be looking at for price to now do it again on a lower time frame. So the time frame that you would want to be looking at next for that break of structure would be that 1 hour time frame in between the 15-minute time frame. So if you get one on the hour time frame or the 15-minute time frame of break of structure, it would now coincide in confluence with the 4 hour, which would be a breaker structure down below, which would give you more confidence in letting you know that, okay, price is looking to go down. So we would get that breaker structure on the 1 hour or the 15-minute. We then would see price start to make higher highs again and higher lows. And then once price is ready to really sell on that lower time frame, whether it be the 15-minute or the 5, it would then break a structure again. Once it breaks structure again, we would now look at the 5 to 15-minute to see where we can get in for that sell and place our SL above structure. Once we place our SL above structure, we would then be able to get into that sell either on the 5-minute or the 1-minute, giving us a precise entry based on the higher time frame in order to get in that trade and be able to make a very profitable trade. And we would feel a lot better because we know that we have the higher time confluence with what the trade that we're currently in right now. So right now I'm going to jump into a, a charted example for you guys of a move that I caught. If you want to see exactly how I broke down this move, you can refer to the last video that I made of the weekly recap, number 4. If you go look at the weekly recap number 4, I go over this trade in its entirety. But for time purposes and just this video's purposes, I'm just gonna go over what we need to. So let's erase all this just so there's not any confusion. Let's erase all this stuff. Oh, we could leave all that other stuff there. So what I saw on this structure that allowed me to feel confident taking this trade was that on the 4 hour, and we could kind of erase this a bit. On the 4 hour, I saw that price ended up closing above structure. So what I mean by that is, hold on. So here. So here, I saw that price ended up breaking structure here. So we were in that upward motion that we were talking about. We had that low, we had a higher high, a higher low, a higher high, a higher low. See, it respected that structure. Then we didn't see price close above. So now we possibly could see some weakness here. So within that weakness, we saw that price broke structure. Once price broke structure, we got a little bit of a pullback and then price just shot all the way down. Within price shutting all the way down like that, we ended up seeing price came into a very valid area here, a big order candle that we have here, which would be that 50% area that you now see is black. But originally it was yellow. So price came into here, which gives me more confluence, more confirmation, more security that price is going to be going in that upward trend that I'm looking for it to go into. Now, I didn't execute here. I was patient because I still wanted to see exactly what market was doing. And we had a lot going on. And it wasn't my trading time when this happened. As you can see, this happened at 1300. So it just wasn't my trading time. And I just wasn't into trading at that time. I usually trade NY sessions. So as you can see, we got that push up into the market around London, New York session, 9 a.m. We got that closure above. Once we got that closure above, I was looking for market to really come back up into this area. So now we're going to go down a time frame. So the 2 hour is definitely something I use just for clarity. It's not for, for you to use to do anything else. Sometimes I can see the candles a little bit clearer on the 2 hour because it's in between the 4 hour and the 1 hour. So it lets me see it a little bit clearer. And that's the only reason why I use the 2 hour sometimes. So I'll go to the two, but there's not really nothing to see. I'm just making sure the candles are clear and I'm looking at what I'm thinking I'm looking at. I'm making sure I'm looking at what I'm thinking I'm looking at. So we got this push up, the closure above, and now we got a closure above on the 1 hour. So the 4 hour closure above here, that's the 4 hour here. We'll delete these because we're not there yet. We'll delete that. So that's the closure on the 4 hour. We got that. Once price went above here, we got that closure on the 1 hour. So we definitely could have even executed here. But like I said, it just wasn't our time to trade. This was London session when this happened. So you can see at 3 a.m., we got that boom, tuck down. We could have definitely got in here. So we got a 50% right chef's kiss right off of here. Could have got impulse move up, or we could have marked up this area with our Fibonacci tool that I have and got that 50% once again, which is just a discounted rate for the beginners. It's just a discounted rate on price. It's nothing crazy when it comes to that 50% that I'm talking about. But yes, we always try to look for a discounted price when we're trading because we want to get in the best possible entry, like I said. So, boom, we had that activation off the 50%, which obviously it just wasn't our time to trade yet. So, we still wouldn't be impulsive. We don't want to have FOMO. We don't want to have a fear of missing out. So, what I did was I wanted to wait for price to now come back into here during my session and get in for this trade. I then waited, but I never got that push down. So what do? We go down to lower time frames and see if market structure is giving us that indication that we are looking for. So what we would do here is now we would look at the 15 and see where we would have a break. So I'm gonna let you guys tell me in the comment section where you guys see a break on the 15 minute. Is it here? Is it here? Well, I'm gonna give you the answer. We got actually two breaks on the 15-minute structure. So obviously on the 1 hour, we had that structure here be broken. So we'll put that 1 hour there. Boom. 1 hour structure was broken. 4 hour structure was broken. We're looking for now the 15 structure to be broken. And we got that 15-minute structure here. All right. We got it. Matter of fact, we got it here. So we could count this one too, but we originally got it here. So that structure that we got, boom, it broke structure here. As you can see, we had a high, a low, a lower high, a lower low, a lower high because we didn't break above these two structures here. And then we had a lower low, which let us know that this is a price shift. This is a shift in price. So exactly what I was showing you guys on the little diagram, we got the boom, 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 boom. So literally perfect. Even if you want to get into, if you wanted to get into a little quick sell, you could have got in right here. Use your Fibonacci tool to mark up this area after that closed. Boom, you could have got into a sell right here. I'm telling you, market structure is the best way to make sure that you know what you're doing when you're on the charts. Boom, that's a 1-to-1, but it's not your ideal trade, but it could be taken and it could make you a little bit of money. So learning market structure is a key thing when it comes to trading. So we got that push here. Boom. We break structure. Broke structure now on the 15 minute. Boom. 15-minute break of structure. We got that now. So now we're looking for price to now come possibly into this area or this whole push down before it had this push up. We can mark up either one. Like I was explaining to you guys before, this whole push down could be marked up to now give us another 50% area for us to get into, a precise area in the market where we can now execute a buy with a small stop loss right below the last structure it created for an impulse move up. All right. So there's a lot of ways where you can get into the market with just market structure alone. You don't need all those indicators. You don't need all that other stuff. You don't need the strategy your guru is trying to teach you. The ones with all the Lamborghinis and the Ferraris and stuff, trying to sell you a course. You don't need all that. All you need to know is market structure. All right. And then let's just say we didn't take that 50% trade because obviously you see it's not in our time frame. It's not in our, time for us to be trading. Um, we got another break of structure here. So we got another break of structure on the 15 minute, again, confirming that price definitely wants to go up in our direction. And let's look at the 5 minute just to confirm that. 5 minute structure, boom, we got that 5 minute structure. So we'll just label this as a 5 minute structure for documentation purposes. So we got that 5 minute structure as well. Let's just play this out and kind of see what would happen if we were to have gotten here, which I did take this trade. And yes, it was out of my session, but it was, within structure. So I was okay with taking it out of my session because it was within structure and it was within my trading plan. Besides the time, of course, everything else was alongside my trading plan when it came to this move and how I took it. So I did take it a little bit further, like over here, but we'll just for the price where we're talking about right now, we'll let it play out. So as you can see, price came into here, came into this area. Okay, we would have got stopped out, but yeah, look, I didn't get in then. I didn't get in the price yet. I didn't get in this trade yet when all this happened. But we got that break of structure here, 15 minute. We would have, because of that last structure that I created before the break, we would have put it below this structure here because just for higher time frame reasons, we would have. I personally would have put it below here, which I did once I finally got into the trade. But it was out of my session time. It was like 3 a.m. when I got in. So I just ended up just seeing like how structure was playing out, and I just liked how it looked, so I got in. So around, let's put a vertical line where I got in at around the time I got in at. So around here, London session, that's when I ended up getting into the trade, because I saw that price was just playing, in my favor. So what I mean by structure, like yes, the 5 minute structure broke up and its confluence with the 15 as well. It did come below this, but it didn't break this structure here. So that 15-minute structure that originally broke is the one that you would want to put your stop loss under in order to make sure that you're maintaining that confluence with structure, because if it breaks this whole structure here now, that we're going down to this POI area to then do the move that we were talking about. So it would come down, create that lower high, and then we'll start to make that market trend up after that. So all else fails, we had a short stop loss, we would get stopped out, and we would wait for it to come down here in order to get in. So no biggie, but it didn't end up working out that way. And I saw that price was going to definitely possibly, make that move. It wasn't FOMO or anything. It was definitely market structure that made me feel like it could definitely go that way. And I was just up at the time. So, I just clicked the button. So let's just let market play out real quick. So this is when I was already in this trade. As you can see, you got the W right there. As you can see it, the W. I had placed it on break even, so that's why you see the W/break even. Because once that price went up, it was outside of my trading time. So a part of my trading plan is if I trade outside of my trading window, that I would place a break even just in case price decides to come down before an actual session that I'll be trading, and it would take me out at $0. Basically, like I was never in the trade, because if it's not a precise entry and it comes back, that just means you weren't precise enough to be in that trade long term. And that's just exactly what I do, just to keep myself covered and keep myself accountable to my trading plan, even if I break my trading plan by trading outside my session. So you always want to cover things that you do outside of your trading plan, even if you do them. So here we end up seeing, market structure, but price was just beautiful. I did break even right here. So you see price almost took me out, but we just continued up, and I ended up catching a good 230 pip move off this. Like I said, if you want to get the full breakdown and analysis, go back to the recap video. But this is all market structure. This is all what you need. You don't need no indicators. You don't need any fancy things. I know I have the Hublot algo, but that's just for specific entry purposes. That's so I can catch entries on a higher time frame if I wanted to, and things of that nature, which I also used as confluence for this trade as well. So when I did go down to the lower time frame, I did see that we got a cross on the Hublot algo, which I can show you guys. We got the buy cross there, but also at that time we had a buy cross here that confirmed that move up for me, that we were going in buy structure on the higher time frame. So once I saw that printed, I was like, okay, like what I'm looking at on the lower time frame coincides with the 4 hour break that I saw, and the indicator is helping me get um, a, a, a higher confluence and making me more confident in that trade, which allows you to hold it, which allows you to up your lot size, which allows you to be more confident and not have to look at the charts. Or, once you see this big impulse move up, you're like, oh, let me get out. It might come back and take me out. Or let me get out right here. It might come back and take me out. Or let me get, I eventually got it up here, but, because I saw price kind of, do a little dip, and it was, close to my session opening up. So I decided to get out. But yeah, definitely. It was just a perfect move. I loved the way it moved. It ended up going for a good 300 pips before it started making a little bit of a move down, but EU has been shooting up ever since. But that's market structure in a nutshell. There definitely will be part two, part three, part four, possibly to this video. This is just volume one. So definitely, if you guys have any questions, concerns, comments, leave a comment below. Make sure you like and subscribe. I'm Hublot, and I'm out.